Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Sunday, setup Sunday, a quiet week. It's been on the crypto side of things. Some of the overheated legacy stocks have started to pull back. The Magnificent Seven have pulled back a little bit. This is none of those things. This is money market mutual funds in the US. And this really represents the risk-off hot ball of money that's getting near 5.25% yield. And if we look at how this has changed since rates started rising, I think it's fairly safe to say the floor here is around 3 trillion and we're currently nearing 6 trillion. We're at like 5.5 trillion. So if I'm looking for ways to measure where the money is going, this certainly doesn't help risk assets, and it definitely doesn't help regional banks, but that's another story. Just an interesting data point that we hit a new, probably all-time high. I can't imagine it's ever been higher than this. So cash is definitely not trash right now. And really what I'm watching this week on the DXY, and kind of in perpetuity, I guess, until this channel breaks, is whether or not the DXY can remuster a bullish breakout on the daily cloud. The last time we had a similar structure form, that was before rates went to 5.25. So I doubt we will see the kind of run we saw in 2022. However, this certainly looks as though we are set up for some dollar strength. If we can cut through this resistance, call this whatever you want, some sort of inverted head and shoulders. I don't know. Look, I just call them as I see them. There's 3 bottoms here. I call it an inverted head and shoulders, but we get through the cloud, we get through the 200-day, we get through this channel, and I can't imagine legacy does well. I can't imagine crypto does well. So it's definitely something to keep an eye out for, especially as crypto just flatlines, is completely dead. Crypto's looking for something as a catalyst to go up or down at this point, whether that's strong DXY, whether that's BlackRock ETF, which isn't going to happen anytime super soon, most likely. It's looking for something. So this would be one of those somethings. Now, why would the DXY be bullish? I don't have great reason or rationale why that would be the case, but on technicals, continues to look very good. Something else that's problematic, maybe more so on the inflation front, would be energy, oil, gas. Again, from a chart perspective, this looks very strong on the bullish side, which isn't what you want to see if you're bullish legacy, if you're bullish crypto. There is some hope here that based on the technicals on the cloud, we are pretty overbought currently on the daily. Now there's all sorts of supply demand shenanigans behind the scenes with OPEC, obviously, and SPR, and everybody crying about refilling it. That's all well and good, but if energy keeps rising price-wise, we're going to have trouble on the inflation side of things. And maybe that's what's going to be enough to give DXY that boost, with the assumption that the Fed's going to have to keep raising. I'm just sort of, connecting some random dots here to justify why the DXY would find some strength here, but definitely something to watch for. Like I mentioned, this is QQQ. This is the NASDAQ, basically, NASDAQ ETF. Many charts in many sectors look very much like this, where we've had a significant pullback. We've had significant RSI pullback. NVIDIA, Apple, all of these are almost on the floor as far as just barely not oversold. So one thing I'm watching for this week is the potential for a falling wedge to play out here. I just don't see that in the cards, considering how overbought this has been and how much of a rally these things have had. I think what's probably more likely at this point is some sort of strong reversal. And you're seeing that on a few things like Microsoft through the daily cloud. This is the 12-hour, but it doesn't really matter. What you're looking for, falling wedge, maybe a bull div throughout the week on this stuff. And if things get ugly, full retrace all the way back to the respective cloud levels on a high time frame. Doesn't really matter which time frame, but probably the daily. So if we have DXY strength, if we have tech stock weakness, will that be enough? Like energy strength, will that be enough to do something this week on crypto? I don't know, but most likely, if I had to bet on something, it would be those set of factors to actually move crypto this week. Before I talk about Bitcoin here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. I've used Kraken for many years, and I'm super glad they finally updated the UI. And before we talk about Bitcoin real quick, just monitoring the Tether price, potentially we may see issues with Tether towards the end of the week, and as wires hit, the Tether price returning back to close to $1. The Kraken market for USD is small, but it is, a window in the soul of USDT prices. So when there are major issues, you certainly see that on the Kraken tradable pair. So it's below $1 here, but it's not, as bad as it was the week prior. As far as Bitcoin is concerned, really, we have a pretty wide range of possibilities still, and things on the top side don't get exciting until 31K. And even on the downside, we could chop below the cloud. We could chop around at the yearly pivot. We could chop at the 200-day moving average in the green here. We could chop at the white, which is the 20-week moving average. So we're going nowhere fast just yet, but we would certainly tip strongly bearish if we were below all of those support levels. Even being in the daily cloud here, I don't think that necessarily tells you anything. We haven't done anything for what feels like 2 years at this point. So as people are loading cash into interest yielding vehicles, again, it's going to be tough for anything that's fighting that to have some inflows when it's doing nothing. We're trying to cold start this engine, and it's just very difficult to get anything going here. Definitely need, at the very least, a news catalyst. And ultimately, are we in any rush anyway? It's a pre-halving year. It's not that big of a deal. We know that inevitably a spot ETF is coming. Not that we should rely on that as our savior. Not that we should rely on Bitcoin halving being our savior. We don't want to have false idols here. We want, utility adoption, actual use to drive price. But it's just very hard to get anybody to care about anything other than yield or those Magnificent 7 tech stocks right now, in my opinion. And we're definitely seeing that on the Bitcoin side of things. So what to watch for? 31K, 26.5, 27, all that is fair game. As we start to break these supports, if we do, things tip more and more bearish, right? But it's not like, okay, it's all over, guys, failed experiment, it's time to go home. It's a pre-halving year, and we tend to sell off in pre-halving years. One thing that people will inevitably ask me and bring up is, what about the weekly edge-to-edge trade? So it's kind of literally like looking at the moon. We know where the moon is in the sky. The question is, how are we going to get there, and when are we going to do it? Okay. So yes, I like a trade to 42 here. There are also many versions of this on different alts. Not all of them will work out. As a matter of fact, most of them probably won't. I'd show you versions of this from 2018, 2019, and so forth. But many of those that didn't work out got delisted. So I can't even, go back through history and look at those charts. But if there's any of them that will potentially work out greater than the others, it'd be Bitcoin. So anyway, how you could trade this here, you could say, all right, I know it's an edge to edge. I'm going long, stop loss at the cloud, and in this case, the 10K, the blue line, super tight stop loss. I don't hate that play, especially because we are super tight on volatility. You're basically, going long, price long volatility. You could also long this with a stop loss at the Kijun, which I think is too far away, or you could just wait and do nothing, right? And so if we look at kind of different versions of this trade, this would be the tight stop. This would be the farther stop at the Kijun. And then this would be what I would want to do down the road once the Kijun comes up to the cloud. Once this stop loss zone tightens up a little bit, and hopefully, what I really want to see is volatility to the downside that doesn't break 25. So maybe that's just wishful thinking, but sure, why not? Long to 42 from here, great. But the better trade from a risk reward perspective would be waiting, I think. But I'm sure there's going to be some people who want to risk it for the biscuit. This is daily B bands, super tight. They got super tight, expanded, retightened here. Doesn't really tell you much, I don't think. We're in the very middle If you want to watch something on low time frames, I would watch daily B bands, because if we start to expand throughout the week towards the top or towards the bottom, that would be a strong tip off for where we're headed. And you can see it's a super tight zone, so it's not too far off. And on the weekly, again, doesn't tell you much, but we are consolidating above that 20-week moving average. B band's the tightest they've ever been on the weekly. And really, we're in trouble if we're below 25.5, which would be breaking the bottom B band. Things would start to get bearish once we break that midline. But ultimately, if we get a weekly close at the bottom of the band or below, then typically that's a slam dunk for where we're headed. Alternatively, I sound bearish because I expect this to be bearish at this point, based on where legacy sits, based on cash flows in general. But let's say we're bullish. Again, 31. It's not like rocket science here. 31 is definitely a level to watch throughout the week. And if we pop a pitchfork on this bad boy, we're still above the midpoint of the pitchfork. We're on the bullish side of a bullish pitchfork as it's, pointing up. It's giving us our rate of change here. If we were to pull back to a point similar to the SVB blow up weekend, this diag would be fair game, somewhere around 25, I don't know, whatever this is, 25, 26. But even below that wouldn't be the end of the world. So we do have a lot of breathing room. As explosive as a move we should get based on this consolidation, we have a ton of breathing room, I think, on the bottom downside. Even if the cloud flips bearish, even if we cut through all that resistance, I think we'll still be okay. If anything, that'll clear up a picture down the road for bullishness again, right? Because if we basically destroy all this support and then reconsolidate and go again, that would be the easier trade. Here right now, it's like, what do we do? I don't know. It's bullish, but it looks like junk. I don't want to touch this, right? The easier trade would be very similar to what happened at the beginning of the year, where everything flipped bullish. It was extremely obvious that it was a different market than the prior year. As far as alts are concerned, dominance still holding above 50%. If you take off stables from this equation, I think it's even higher than that. I expect dominance to continue to gather strength, especially without lack of clarity on the regulatory side of things for alts. So I even have to remind myself, okay, ETH looks good, Link looks good, hell, Doge looks good. Maybe those will move. Maybe they'll move while Bitcoin's consolidating. I tend to doubt it, but maybe they move together. Maybe they don't. Maybe we get a rotation trade from Bitcoin to ETH to more chunk down the market cap table, right? I wish I had more to say about ETH. I just don't. It is continuing to scribble in this ascending triangle on descending volume. The target is 3K. It may move from 2 to 3K in a week if this breaks out. That's probably hopium. Again, I'm just bearish here. This just doesn't look like it wants to break up. But once we're above 2K, then we can say with a decent degree of certainty that, hey, this thing's probably going to keep going. And the resistances would be a yearly pivot and just a measured move of the pattern. You can also look at the weekly cloud on ETH. It tells you basically the exact same thing, 2,900 thereabouts as far as an edge-to-edge move. Similar to Bitcoin, not like an amazing setup here. Your stop loss is quite low. But hey, if you're confident and want to start accumulating spot in this situation, I don't hate it, right? Spot with zero stop loss. You're like, you know what? This looks good enough. It's time. I can get my yield on ETH or whatever people do. And you're good to go. If we zoom way out on ETH, put a pitchfork on that bad boy, we also get a pretty interesting picture. Similar to the current all-time high, as overbought as we were there based on this rate of change, we're potentially entering a range where we are oversold. So from a risk reward perspective, just looking at distance to midpoint, we're getting in the sweet spot. Again, maybe that's hopium. I don't know. But if this breaks down, I don't think it's over for this pattern per se. As ugly as that's going to be, 1,500 or less, things are going to get bullish. And if people start unwinding their staked positions, which I don't think they would do, I think they would have to take, that would probably be a 3-digit ETH price for people to actually do that. But if they started to do that, that would of course provide even more downside pressure. But maybe we need to see that challenged in order to actually get confidence that this thing's going to move higher, because I don't know, for ETH's case specifically, I don't know what's it going to take. I don't think an ETF that incorporates ETH futures is enough, personally. Here's a link. Look, I'm not a Marine, I'm a mercenary, and if I'm about to get paid, baby, I'm going to be long Link. I just, again, I'm not super optimistic that this is actually going to play out anytime super soon. I do like 28 to 30, whatever this is, as far as a multi-month target. Now, I wouldn't expect this next week, okay? But this has consolidated a lot. It doesn't really have a lot of competition on the utility side of things. It's used in DeFi all over the place. It's an essential component of DeFi. I'm not going to argue that. The tokenomics are something else. But from a technical perspective, if we start reconsolidating at the highs or break the highs, love it. Otherwise, we just keep bouncing around in here, most likely. So it doesn't look horrible. And maybe for crypto, the GBTC and ETHE discounts need to close first before spot moves. We'll see if that's the case. But right now, there's still massive discounts for GBTC and ETHE. And both of those charts kind of look better than spot anyway. They've seen recent highs, whereas spot Bitcoin, spot ETH has not. And there's a built-in potential extra 20% upside, 35% upside. So on the institutional side, accessing these products might make more sense than holding spot anyway. And that's a problem for spot, obviously. So it'll be interesting to see what happens if and when these discounts do close. And something else that I always keep in the back of my head is seasonality. This is Bitcoin average monthly returns 2013 to present. And as we are in the middle of August, which is one of the weaker months already, I've got my mind focused dead set on September because I know September historically is not a good month. I also know Q4 is where it's at. Bitcoin does extremely well in Q4. So merging this with the technical picture, it makes much more sense to me that we actually chop around for a month plus and make that edge-to-edge attempt in Q4. So again, I'm in no hurry whatsoever. And then if we look at ETH tends to do better in the first half of the year. September is also terrible for ETH. And because I think ETH is an alt, okay, first of all, and it lags Bitcoin, it tends to do better towards the end of December. It's more of a late cycle rotation trade historically. This is 2016 to present. But the end of the year for ETH, not so great. So when I'm looking at that 2K level, maybe it breaks 2K and doesn't actually pop to 3. Maybe it just breaks 2 lazily, doesn't really go anywhere, and then eventually moves to 3 towards the end of the year, maybe even towards Bitcoin halving. I don't know. But if I'm trying to piece together the puzzle on how this might happen, I think seasonality may help. We'll see. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.